Good afternoon, everyone, and welcome to the FX Daily Roundup. And really, the news is really right here with the SPOOs. We really need to go and move into that because we're coming into, I believe, is a key area here with the SPOOs. Now, we've got the index on here, but we're actually looking, bear with me. Let's pull this back. If you're looking here on the futures, they're at 31.40 and a quarter, 31.41. 25 is going to be the 78% of the run from 31.28, the morning lows, to the overnight highs in Asia at 31.45. Also, 31, let me take a look here, bear with me. Also some resistance at 31.41.50. So I think they're going to make that move up there. There's really not, I mean, we saw a minor dip when we came up to 40, kind of dipped back and we kind of popped ourselves right back up here. We're almost at 31.41. And then we kind of dipped back and then we kind of holding our own. But I think they'll try and make that push a little bit higher here. But I would expect for a little bit of pause around this 31.41.50. And but like I said, hard to fade this stuff. I mean, I think you get some moves, initially in the first 15 minutes, and then you get, another chance about within the first hour, and then maybe a little bit after that. And then that's after that is just bid. I mean, it's hard to. It's just like the old adage that Blake talked about, trying to hold a rubber ball below. Inflatable ball below water. It's just hard to do. Eventually just pops back up and we just keep on moving higher here. But it does look like maybe we'll make it up to about 31.41.50, maybe just a bit higher, but we got some nice confluence there. Like I said, resistance at 31.41.50 and also the 78% of 31.28 to 31.45. And I'm talking about the futures. Coming in right there at 78%, so at 31.41.25. So I would expect a little bit of a pause there. Looks like a little bit heavier volume. Yeah, right around that 41.50, got a little bit of volume coming in. Nothing major, but I would think that the market will take a little bit of a pause there. We'll see what happens. Other than that, let's take a look here. Crude's coming up a little bit higher. I mean, nothing to write home about as far as I'm concerned. And gold has obviously come off from those levels that we saw over a week ago when we were at 1475. And this market has, definitely pared back, as equities continue to move higher. Moving on to FX, man, this euro just looks so weak, although we're just not really moving. During the European session, there was, I think it was almost 9 hours where the total range of the euro was, I think it was 19 pips for 9 hours. I mean, heck, I'm not talking about fast markets, but normal markets, I mean, you could do that easily within 15 minutes, if that long. You know what I mean? You're talking 9 hours. It actually looked like it might even be ready to move, break out a little bit or move higher. You can see here that the exponential moving average, though, caught it right there on the 2 hour. And I usually don't use the exponential moving average for 2 hours. I use them for the 30-minute, but you can see here, head on the 2 hour, and you can see here, nipped it there. Looked like I was going to get ready to try and break out a little bit, and we turn around since dip. But the key is if we get a daily close below 10.05, bears are in control. Potential move down to 8.96 with the first test at 9.57. Speaking of which, the inverse cousin to that, so to speak, is the cash dollar index. We've been bumping up against this 98.41. That's been a level since last week, and we've come back to revisit it. Looked like we might have started to slide a little bit towards the end of last week, and the dollar index came back. And so right now, like I said, here's the key level. It's been the key level for a while, which is 98.65. We get a daily close above 98.65, and bulls are in full control with the first stop at 99.13. Moving on, we are seeing the dollar CAD pare back a bit here. We had our bias chart resistance today. I think it still remained the same, which was 33.36. You can see here it came up a little bit short of that, at least today, and the market's kind of getting a little bit tired. It's still bullish, but we've had a pretty good little run, so taking a pause back certainly is acceptable and within reason. Saw the cable, saw a nice bid yesterday on positive comments from Boris Johnson and the whole thought that maybe Brexit would get done sooner than later. And we saw this bid when actually the cable came in at the end of last week, looking at cable was going to slide further. Came in and saw that bid come in here. But we think we paired back a bit. We saw the latest YouGov poll, and the conservatives, it looks like the lead may be kind of dipping a little bit, so maybe not as strengthening or as fortified as possibly thought. So we're kind of giving back a little bit. So a little back and forth here with the cable. Dollar yen, well, look at us here. We're at 9.10. Well, you know what? Let's go move into the daily for a little bit better perspective. So, we're above 109, and our resistance today, I think we had it at, I don't know if we had it at 109, and then obviously 927. I don't know if, maybe we just may have kept it at 9 or left it for 927 since we were a bit stronger here. But anyway, that being said, we've talked about this ad nauseum about the significance of 927, how that's, we went over it yesterday, how that's been huge on the upside. Decision making redoes it up to the upside. Where are they going to? They're going back to 927 when it got below it. Obviously, opened the door for us to push much lower. That was the old a little bit of a flash crash low from back in January of this year. Then we turn around and pop back. You can see we see some struggling here. We come back, and where are they going to go back to? Well, they're going to head back eventually to 927. Then they're going to rally up 927. So we've already gone on multiple times about this. Well, here's the resistance at 927. But look, the spoos keep making a high every freaking day, and that's what's been the question mark, is because the dollar yen is just not buying into that at all. Like I said, we've mentioned this over the past 3 weeks. If you look at the dollar yen, we should easily, and I mean easily, be at 111. So it tells you something. So, if and when we finally start to exhaust ourselves or turn lower in the spoos, we could see a pretty good correction in the dollar yen. If and when, we're still waiting, this whole China trade talk nonsense is still lingering, and the market just keeps on falling for it. Just as, like Blake used to say, with the donkey with the carrot, and they just keep going along with it. You can't fight it. Blake made a good point this morning when you talk about all the 401k money, and I think Dale mentioned, on top of that, to a certain, much lesser extent, you got buybacks. Everything is kind of pushing liquidity into this market, has no choice but to go up. But eventually, like I said, you would think it would slide back. Whether we go with the blow-off top and equities, I don't know. But dollar yen has been, ignoring this move. Now, the only thing that was surprising last week was when we did see the spoos break down to some very key monthly support level of that 30.90. And I was very surprised to not see the dollar yen go sub 108. So that's kind of opened the door for us to move a little bit higher. It's still a bit of a restrained move in the sense that it hasn't gone above 927. Heck, even when we had the China Xinhua headline in the Asian session, we couldn't even take out 927 on a stop run. But obviously, they're not ignoring that we're still moving higher here in the S&Ps. Dollar peso is kind of all over the map, so to speak. We actually had our buy chart resistance today to visit the old highs. Let's call it the most recent old highs, if you want to call it that, but most recent highs, which was 1956, and we just about come up there. You can see that level there. That's actually been one of our key levels from before, 1956. You can see where the market gathered around, thought about, fought back and forth, bit of a battleground. We came back down, another battleground. We fall back, we come back to challenge it. Once we get above 1956, we take off, come back down, battleground 1956. So you can see the attraction in 1956 and why I like to go in and draw my support levels across the bodies, because I said that's, put up or shut up time, when it comes time to, close, the body's going to close, whether it's going to close an hourly, 2 hourly, whatever the case may be. But it's 1956, so we may go in and try and tag that. But nothing, like I said, and the other pairs, not really seeing anything of any real significance. Aussie continues to remain a little bit weak. Yeah, we came up a little bit higher because in the Asian session, Governor Lowe was talking about that he felt that negative rates were not appropriate at this time. And that got the bid going, but heck, we couldn't even take out 68 cents. So, when you look at this, you might think, wow, we've seen a real big turnaround. Let's put it all in perspective. I mean, it's the old adage, if you fall out of a window, but if it's on the first floor, how much damage do you do? Well, in this case, the opposite. How much strength do you really get? If you can't even take out 68 cents on what would have been bullishly constructive news, him stating, hey, he doesn't see any, the door's not open at all, or for negative rates. And I think and also there was something else he mentioned. I forgot what it was at the time, but certainly nothing to go on and write home about, in the very least here. But obviously the bigger news is obviously with what's going on with equities. Other markets have been just relatively quiet. When we look at some of the cross rates, Aussie yen trying to push up a little bit higher. Like I said, yen is a bit weaker. Aussie got some constructive technical boost from what Lowe said, but it hasn't made that much of a difference. You can see right here with the Aussie yen, we're a long ways from even our resistance, so to speak. I mean, we just, you would think with something like that. I mean, you got things going for it twofold. You got the yen weakening, and Philip Lowe comes out and says that, and that you got the double whammy here. I mean, to give us a boost. And look at this. I mean, it's the old commercial. I've fallen and I can't get up. I mean, seriously, come on. You can't get up for that. After the yen's weakening and Lowe comes out with his comments that are constructive for bulls, you still can't get up at all. Looking here at the guppy. We're just smack dab middle in the middle of this right now. Last Friday, it looked like we were going to actually slide. We made a breakout above this area here. We've been trading within this apex, and the apex has already ended, but I mean, we're still stuck in that area. And there was quite a little bit of a fake out. I mean, we look like, okay, we're finally breaking above. We're on our way. And then we end up with basically, put it in perspective, if you back it up a little bit, essentially a gravestone doji. And then that was followed through a little bit to the downside. And it looked like on Friday, we're going to break lower. We're heading for a move lower. But then we get Boris Johnson's positive comments that pushes up, kind of press a little bit. We didn't get too much higher. I think today's bias chart resistance was right there at 40.76. And we're kind of paring back a bit. Once again, nothing of any real significance. These markets have been quiet. I mean, honestly, I can see where markets are impacted. The majors are impacted with this whole U.S.-China trade deal, okay? But some of these other cross rates, honestly, I really don't get it. I mean, you can offer things like, well, the yen's still tied to this or whatever, and the Aussie, but come on. I mean, like I said, I can see where the majors are going to be, kind of have a, the what do you call it, the ball and chain, and they can't move too far. But these other cross rates, are you kidding me? I mean, they can't even move, like I said, reminds me, I don't think we're at Thanksgiving. I think we're at Halloween, because we're actually in the graveyard trading right now, because they're just simply not moving. And I guess they're simply waiting for the U.S.-China thing to go on and finally, resolve itself. Another one, like I said, is the euro. I mean, holy smokes, man. I was counting this thing this morning. 19-tick range in a 9-hour range. A 19-tick range and a 9-hour range. So, like I said, this is actually, I think I saw Blake mention, I think in the chat room, this is the lowest volatility for the euro on record. That's how quiet it is. I mean, I can't wait for this thing. This thing used to be just a beautiful day trading vehicle. I can remember when the ATR was 130 or 127 pips in a day. You know what I mean? So you get this back and forth. I mean, in time we will break out, but what is going to get us to break out, meaning, I mean, I know what it'll be, which is just however this whole U.S.-China trade deal thing plays out and the implications that'll go beyond that. But we need to get to that point. But it's going to require that catalyst. And I addressed that before, because when we looked here at the cash dollar index, I think the reason that's important is because, look, we mentioned it yesterday, and we went with this yesterday. Look, anything short of a 100 pip move in the dollar index to the downside in one session, in a single session, anything less than a 100 pip move means nothing, absolutely nothing. I don't care if it's 75 pips, 80 pips, it means nothing, because this dollar index has been like, once again, the ball below, you're trying to hold a ball below the water, and eventually it pops right back up. It would take literally in excess of a 100 tick move in one session to actually generate some momentum where, and even then there'll still be some buyers to pick it up. But we would have to break 100 ticks in one session and say, wow, maybe we can press to the upside. I mean, press to the downside. You know what I mean? And as I mentioned before, is obviously the euro comprises 56.4% of the cash dollar index. So obviously, trades inversely, we'd have to see the euro obviously going and pop up. Any moves up in the euro are going to be faded. Even if they move up to 113, I mean, let's be realistic. Maybe not 113. I was getting ahead of myself, but let's say anything up to 1250. Let's go back into the euro. Think about it. This thing has gone nowhere, and every single move is a failure, an absolute abysmal failure. So really, and not that we can't move higher. I mean, I've heard all this talk about, I've had several people talk about that, is that, being a funding currency, we could really rip up. We saw something like that, I think it was about 3 years ago, where the euro really took off like a bandit. And it could, because like I said, volatility is so low. But my point is any move up to here, right up to here, which would be, well, that's not that much, 1116. There, hence, remember I said about 100 ticks, the cash dollar index? So really up to 1116, means nothing, means absolutely nothing. I mean, you get up to, we close at 1085, means nothing, means absolutely nothing. Like I said, anything up to 1116, and what I say about the cash dollar index, 100 tick in one session, well, that would be 100 ticks here, okay? Means nothing. You'd actually have to get beyond that to say, wow, maybe we can push a little bit further. But, believe you me, there will be willing sellers all the way up in here to 1215. They'll be licking the chops at 1215. So I'm saying this market would actually have to get in excess of 113 to actually potentially put in the bottom. That's how high. That's how bad it looks, like I said right now. Just like I said, the dollar index. I mean, if you see the market come off 50 ticks in the cash dollar, means absolutely nothing. We need a 100 tick move in one day. We need a catalyst and a catalytic move, some kind of catalyst that would generate the cash dollar index to go off 100 ticks in one session to say, okay, maybe we're going to get some follow through. And even then, you still will have people willing to go and buy it for good reason. The same thing inversely, like I said, with the euro, it would, the euro would actually have to close. We'd have to get a daily close above 113 right here. Essentially, I think it was at 1283 to say, okay, we put in the bottom. It looks like we put in the bottom. Anything else, I'll be looking to sell into the same. That's about it here. As I mentioned, we've already mentioned about the SPOOs, and 31.41, 25 is 78%, 31.41.50 is the resistance. We'll see what happens here. Reminds me of that saying, I've heard that, and someone mentioned in the chat room yesterday, also made me laugh, was resistance is futile. And it certainly looks like that way, because we always keep pushing higher and higher and higher. That's all we got. Thanks for joining us here on the FX Daily Roundup.